Hey everybody, how we doing out there? We're gonna try for round two today. We had a little technical issue with access yesterday. Thanks for your patience, especially if you have joined us again for day two of Ready Set Live. So today is the 2nd of January. Welcome to the new year in 2020. Lots of people are disagreeing as to whether it's a new decade. Um, wow, I guess there's
Actually,
yeah, actually, yeah, that'd be, you should dig up that graphic. That is like the perfect graphic for that. So, we are coming to you today from all over America. So, I am in Greenville, South Carolina, and it is pouring outside. And Mav,
coming to you from Los Angeles. It's beautiful.
right down from the Rose Bowl. Wow, that was really cool seeing the B2 fly over.
Yeah.
And
Yeah.
so, where is everybody else coming in from? You guys know the drill. So, we got the Azores, we've got Holland, we've got Maine, one of my favorite destinations to go to, especially in the summertime. And we got a couple of things for you guys today. We'll keep it short and tight. We don't have to revisit the ground from yesterday. So I have actually got, once we get a couple more folks on board here, I've got top 5 things for 2020. So what do I see happening for 2020 around the trading space? And then I'll flip it over to Mav and he will continue yesterday's, assuming that we can keep this thing up and rolling here today.
We'll see
Yeah, we're
if YouTube allows us.
all right. Let's see. We got Stanford, Connecticut coming on board. Welcome aboard from Ready Set Crypto. Thanks for joining us here today. Like to know what you guys. We'll do a Q&A session after we finish with our Death by PowerPoint. So look forward to seeing that from you guys. We got Crypto Don Juan. The party is here now since Crypto Don Juan is on board. Thanks. Happy New Year to you as well, sir. We got Brian Donnelly coming in from Ireland. I'm not sure if there could be a more Irish name than that. Russell, glad you're on board with us. And we have Edward coming in from Toulon, France.
France.
France. And we got Michael coming in from Toronto. This is a international crowd here today. All right. Without further ado, I'm going to jump into my segment here. Say goodbye to Mav for a second. All right. We have got the top 5 things for 2020. Again, my name is Doc. I'm going to go through this for the next 5-6 minutes with you guys. So what are the top 5 things that we are seeing with the crypto trading market as we move into 2020? Well, I'll give you my opinions on that. Number 1, this I've noticed a couple of days ago, and I thought this was really interesting, and it tells you something about the market. So Bitcoin versus the US dollar or versus any other fiat currency is really not acting like an asset with a floor of support like what equities are. Here's the normal chart. Now I'm going to flip this around for you in a minute. What I want you guys to notice is that we have kind of the opposite situation from equities, which I'll show in a minute. So the tops are all very spiky. The bottoms are all very long and protracted. This is the exact opposite that we see with equities. Here's an example with equities. Now, equities, something that I always talk about is like bottoms are an event, bottoms are an event, tops are a process. Bottoms are an event, tops are a process. This is what we've seen in equities really since, I don't know, 1950, even before my time, right? So bottoms are an event, tops are a process. Why is this? It's because there's a floor of support. There's people, if there's blood in the streets, there's too many people waiting to gobble them up, basically squeeze the shorts out to the upside and drive that. Ask yourself why that's happening. Now let's flip Bitcoin upside down for a second. I've inverted the chart. Why? Why not? Because notice how it looks different now. It looks more like the stock market if we invert the chart. So in this case, bottoms are an event, tops are a process. The exact opposite of what we're seeing with crypto right now. So what does this all mean? It doesn't yet have the institutional accumulation support into funds like equities do. Okay, no surprise, but that is sort of the upside for us. We're also seeing not seeing the capitulation. So I've been looking for these capitulation waterfall declines, and they're just not showing up. It's more of a death by a thousand cuts when we start to distribute to the downside. We don't get the high volume waterfall events. Institutions are not going to buy into these death by a thousand cuts moves. Okay. And if you guys have any questions or comments as I go through this, let me know, and I'll try to catch those at the very end. Number 2, futures derivatives continue to rule the trading space. No surprise here. This is greatly improved from a year ago, big time. So futures offer bidirectional trading ease. You don't have to set up a margin account if you want to short. Remember, you can't short Bitcoin through Coinbase or most of these other ones. Just not very efficient. But if you use futures, you can. You can do anything you want to. We're also starting to see some advanced ladder interfaces hit some vendors on par with the main index futures exchanges, such as Digitex is in testnet right now. Hopefully you guys have had a chance to kick the tires on this one. It's a lot of fun. Digitex Futures has a great ladder interface. If you have never used it before, you'll never go back. And then we're hearing from some of our Omnia customers are experimenting with CoinFlex, which has again got a really nice ladder interface over here and allows you to set up bracket orders. Imagine that. So one cancels other bracket orders, set up the trade, walk away, and it'll tear it down for you. That's how we've been doing it in the equities and index futures trading world for the last 15, 20 years. So this style of trading allows you to not care about whether the price is moving up, down, or if it's just going sideways if you're trading shorter term. So this may be an option for a lot of you that are out there sick of watching BTC or whatever your favorite coin is continue to go down. Why not make money as it goes to the downside? This is what the pros are doing. Number 3 out of 5. Because of that, liquidations continue to drive short-term price discovery. So you can quite honestly see this if you go out to, this used to be BTC Rect. It's now just Rect Twitter handle. And you can see that these price movements are just creating liquidations. The liquidations are driving the price discovery. So I have an opinion on that. Don't contribute to the problem. Pros don't use a liquidation level as their stop loss. This is some really, really bad advice that's going on out there. And trade smaller, trade more often, but don't put so much risk into each trade that you're going to cause liquidation on your account if you get the wrong side of the price. Slow down, be patient, it will come. Number 4, options are being adopted very cautiously by institutions. So crypto options very cautiously by institutions. It's not gotten the level of adoption that I had hoped for. So a lot of people talk about Bakkt and CME and RSX and all these other, big institutions getting into crypto. But don't forget that these are exchanges that they will offer options, not brokers. Now, a lot of people don't understand the difference here. Think about this. The way that you get to this is kind of this relationship here. So here's the exchange, and I'll just do EX here, exchange, and that feeds order flow back and forth to, I'll just call this BR for brokers. So the broker is where all of you guys are logging into, right? This is the traditional arrangement people are coming into. The broker like this, you can't get to the exchange. So for those of you that said, oh, I want to trade on Bakkt, well, good luck. Unless you can, trade, millions of dollars worth, they're not going to sign you up as a member on that exchange. So the same thing is going with CME and RSX. So here is the issue, is that these brokers have got to set up a relationship with these 3 exchanges. CME, that's already there, but it's like they don't have to offer it just because it's out there. So the exchanges want to. They're working with the brokers saying, please take our products. But this is happening very, very slowly. So it's a very slow thing that's going on. So those to be available to retail traders that have to be offered through traditional online brokers like TD Ameritrade, Schwab, Interactive Brokers, whatever have you, right? So bug your broker and say, when are you going to add these things? So as of today, Deribit and LedgerX are the only exchanges that I'm aware of. They're offering options directly to the retail public. And then we get to number 5 is coming up right around the corner. So as goes Bitcoin, so goes the institutional interest and volume in options. True firms will not invest without the risk control of options. So this is all kind of like tied together. What you find in most of the equities markets, which are, we're talking about $30 trillion, right? Firms will not invest that capital into stocks without having the risk control of options. Same thing goes for Bitcoin. So as goes the availability and the liquidity of these options, so goes the potential investment into institutions. And that all ties back to my very first slide where we don't have that floor of support underneath Bitcoin. And then we get to number 5. We may need to go lower one more time before markets go higher. And this is not what I wanted to say, but this is sort of what I'm looking at here. This is a log chart of BTC USD. And the way I'm looking at this right now is that we have this nice trend line holding up really well, and there's that support level at 6,500. But if you look at the daily chart, we've already made 2 tests, and now today we're starting to come down for the 3rd test. There is such thing as a triple bottom, but after that, there is no such thing as a quadruple bottom. It will break through there. So if we get a test at 6,500 again, and if it doesn't take off like nobody's business, then more than likely that's going to be a failed signal, and we're going to have to go to one of these levels here, which is, yes, into 3,000s again. It would happen very quickly. The other potential test is over here at a swing test, which is all the way down at 1250. Don't want to see it, but I'm not going to tell you guys just what you want to hear. That's our job as chartists, is that we're always trying to understand what the real truth is. What is the truth in terms of supply and demand? Right now, we don't have a whole lot of reversal excitement off of here. 6,500, every day that we sit there and linger around that area, the more likely it is to get broken through. And so we'll just take this one day at a time, which is why I think you guys ought to find ways to make money to the downside or sideways in choppy markets and not just sit there and play the hodl game like everybody else. All right, I think that's all I have. I'll open it up for any questions as I turn it back over to Mav, and I'll answer those questions in the chat room while he's going through his material. All right, back to the two of us here. The better looking guy looking on the left there.
Away from those dirty technicals. Ugh, gross. Let's talk about fundamentals. All right. Let's see if this goes off without a hitch. You see that okay?
Yeah, looks great.
Cool. All righty. So yeah, I briefly started this yesterday, but yeah, we'll pick up where we left off with respect to the new people that are seeing it for the first time. So I will talk about this from more of a fundamental perspective, talk about some coins I'm watching, and some of the trends that I'm watching from a fundamental perspective in 2020. So let's go. Oh no. All right. Okay, cool. It always likes to make me scared. So I covered this briefly yesterday. This is the heat map for the last 3 years in terms of, had you bought on this day in 2017, you would have a certain percentage return as of today. So had you bought this day in 2018 or the majority of 2018, you would have a negative return. This just is a demonstration of kind of how the crypto market has evolved over the last 3 years. And the one addendum I made from yesterday's presentation is I forgot to link to where you could actually check this thing out. This is at blockchaincenter.net/crypto-heatmap. Very cool tool. Definitely good for gaining sort of macro perspective. But yeah, like I said yesterday, I'm watching things like Cosmos. I'm watching things like Tezos. Definitely watching Bitcoin and Ethereum. I think they're going to be, you know, the ones to watch this year for sure. Other than that, very interested in seeing things like Maker. Very interested in things like the basic attention token. Those also are having some interesting, potential years ahead of them. So yeah, very, very cool to see the market like this, and is a good segue into starting to talk about some of the trends that I'm seeing going on, sort of in a macro sense, but also in the crypto space. So the first one is obviously the halving. This is going to be on everybody's radar, and this is what we were kind of talking about yesterday. Is that because it's on everybody's radar, it's a surprise to no one. But what my point is, and how I sort of differ from a lot of other people's analysis on this, is that everybody kind of anticipates that this is going to cause volatility. It's going to cause, the markets to go up. Very cool. All right, great. But what actually drives markets nowadays? Because different from 2017 and forward is the how the market's changed and how much more we have to take into perspective the macro markets. What is the stock market doing? What is the global markets doing? And this, I mean, we'll just look back to 2019 as the big example of this. What drove the crypto markets in 2019 from a fundamental perspective? The two major forces, going up and going down, were both related to trade war fears, recession fears. As people got more and more fearful for the future of the global markets, that really helped out Bitcoin's narrative as a global hedge, digital gold. And as those fears of global recession, the trade war sort of took a sideline, that sort of unfortunately reflected negatively on the crypto space. So this is definitely one of the things we're going to have to pay attention to in 2020, and is the second trend we're going to pay attention to. It's important for us to keep in mind what is driving the larger markets as well as the crypto markets. And if they're aligned in purpose, that's when we're going to see some really potential, big upswings, downswings, what have you. But this is what we need to be paying attention to. So, as we've talked about many times on live streams, and this is where I kind of left off yesterday, Bitcoin has developed this narrative of being a crisis hedge. But Bitcoin could also act as a macro hedge, and it's tested that several times in 2019. Hopefully, we'll do so again in 2020. That is the goal. That's the objective right now for Bitcoin, among many other things. But I would say it's most important imperative, narrative in 2020. So we'll continue to watch this. We'll continue to see how it correlates to things like gold, how it correlates against the stock market. But this is definitely at the forefront of how we're looking at the macro markets and how we're looking at Bitcoin. So this is it's also very important for us to look at the risks for recession and how the nature of recession may be changing. The nature of economies are changing. The nature of interest rates and central banks and all of these things. How is that all coming together to either drive the narrative for things like Bitcoin, or are we going to continue to see money printing and quantitative easing and injection of capital into the economy? Is the global macro going to continue to be more and more abstract and resemble modern monetary theory, or are we going to finally see sort of a capitulation and say, enough is enough? We need to really, stop the sugar high of capital injection by central banks, and we need to reflect on the fact that we are just printing money at this point, and just debt is the new money. Do we take it? Does that start to drive the narrative, or are we just going to continue to see more and more of the money printing and just, I don't know, abstraction from reality? To be decided in 2020 for sure. So uh, that's also, I think, a good segue into the trend we're also seeing, which is central bank digital currencies, and how things like the digital yuan and the digital euro and potentially the digital USD are all starting to formulate, come to the forefront of the larger conversation about how economies are changing, And I think this is really interesting stuff. I think we will start to see some real movement on this front because, for all intents and purposes, this is where China wants to take things. And so, where China goes, the US has to follow, Europe has to follow, the rest of the world has to follow because it's emerging as a superpower, at least in an economic sense. So, it's very, I would say, prescient for the US to stay competitive with China. And if China is making their economy more efficient, then it's beholden to us to also find some way to either mimic that or do it in our own way. So this is where we're seeing a lot of difference right now emerging between Eastern and Western economies and economics. Because I mean, if you go to China these days, it's very clear that they're very intent on having things like paying with your face as a possibility. Whereas in the US, we just saw a couple months ago the city of Philadelphia pass a law that all businesses have to accept cash. Whereas, when I went to Shenzhen last year, I couldn't pay with cash. I could only pay with smartphone, using Alipay or WeChat. So it's very different. There's large divergences in terms of how we're paying for things and how the larger economies of scale are moving right now. But it's very important for us to keep pay attention to this because, while not a direct competitor to what cryptocurrencies represent, it is definitely a cousin of sorts. And what role these central bank currencies play in the future is yet to be determined, but something we should definitely watch. The other thing has definitely come to the forefront in the last 12 months, and I think will be even more relevant in the next 12, are corporate currencies, or those currencies issued by corporations, large multinational organizations that seek to data harvest their consumers, find some way to integrate consumer and financial data into one place. And the best way to do that is by issuing their own currency or something akin to that. So that's where we saw Libra kind of take the forefront of this. This is where we're starting to see other large companies starting to have interest in coming out with their own version or some sort of execution of a corporate currency. We saw also J.P. Morgan Chase put out their own Chase dollar, if you want to call it that, and we're definitely seeing the rumors of things like the Google coin come to light. We are seeing, Apple Card. We're sure that Amazon is cooking their own solution up. So this is definitely a conversation that did not die with Libra. Just because Zuck got eviscerated on Capitol Hill does not mean this conversation is over in any respect. In fact, it's going to be even more relevant in 2020 because Libra and the Zuck buck, that's just the first round of things. We're definitely going to see a potential of Colibra launching in 2020, but as well as announcements by other large corporations who have every intent to capture as much data as possible because data is the new oil. And right now, China is emerging as the new Saudi Arabia of that sort of paradigm. So it's the corporations of the world see the opportunity to get on board with this, and there's definitely trillions of dollars to be made. So there's definitely a profit incentive there. Other than sort of the major trends we're seeing at the macro level, it as it relates to the cryptocurrency space, one of the big trends this year, other than the Bitcoin halving, is Ethereum 2.0. And I don't want to talk about this too much because there's too much to talk about. But essentially, Ethereum is getting closer and closer to its second major iteration, if you really want to call it that. I think it's a slow rollout, and it will always be one of those things that is never done. But it does represent a milestone in the history and development of Ethereum, and where Ethereum goes, a lot of the cryptocurrency industry will follow. They're still the most active developer base. They're still the most active in terms of exploratory ventures like DeFi. They're just poised to be in the right place at the right time to be doing the right things as economies, as technology changes over the course of the next 10 years. So Ethereum is definitely one to watch. And it's very important for us to see how they change, how they develop, how they evolve, because they're starting to fall behind in a lot of ways to their competitors in terms of technologies, in terms of their ability to adapt. And unlike Bitcoin, I don't think they just get a free pass, Metcalfe's law, where the biggest network wins. They are, sort of, they're determined. They're judged by their ability to continue to be competitive, to continue to be the place where developers want to go and build their projects out of. And if that ever starts to be threatened, which I argue it is, they don't get to have that lead forever. It's not something that is just a given. This market, this space is so highly competitive right now that even a head start as big as Ethereum's is not a granted, guaranteed thing forever. So we will definitely want to see where Ethereum goes in 2020, and if it continue to attract developers and attract attention. Another thing that's very important for us in 2020 probably won't be as much at the forefront in terms of discussion and development, but I think is definitely worth considering is the Lightning Network and a lot of layer two solutions. So this is where we're seeing things like the Lightning Network, things like instantaneous Bitcoin transactions, things like Liquid, which not a lot of people know about, but that is another example of a layer two solution. This is where we're starting to see the market, the development go. And I understand there's a lot of grievances, there's a lot of frustrations with organizations like Blockstream and Bitcoin Core. But ultimately, this is demonstrating where the blockchain space is going. Layer two is very important right now to see the development on. And even if the first iterations are sort of obtuse and not, representative of what we believe things like the Lightning Network should represent, it's a step in the right direction. I simply can't believe that. I refuse to believe that layer one is forever and always the only solution that matters. That's not how things get built. That's not, I would say, it's just not realistic to, especially the next couple decades of blockchain development. Maybe eventually we'll get to the point where blockchain technology has advanced so much that layer one solutions are as fast or as scalable or as secure as any other potential abstraction development protocol, whatever. But that just isn't the case in today's reality of technology. Just because you expand the block sizes, just because you know, use some sort of different consensus protocol, whatever, does not mean that. I mean, maybe you are the fastest right now, but that won't be the case a year from now. That's the unfortunate case with blockchain technology, is that you kind of put your stake in the ground and then you're forever beholden to it. So that's why layer two and scalable solutions matter, and that's why that's come to the forefront of the conversation around cryptocurrency and blockchain moving forward. So very excited to see what happens with layer two, Lightning Network, Liquid, all of it. Yeah, very exciting stuff. Another thing to watch, getting back to the macro, is the U.S. election. There's many reasons to keep, pay attention to this, especially us being in the U.S. here. But I think we're not just on cryptocurrency, but there's many issues that people around the world are becoming polarized on, simply frustrated on. And I think the US election sort of serves as a lightning rod for a lot of that conversation and frustration right now.
You must be so disappointed today because
It's,
your man Castro dropped out of
oh,
the race, right?
no, he's not my man. No. But yeah, we're definitely going to see things get nastier before they get better, if they get better at all. But I think it's important to say that even after the 2020 election, people's frustrations aren't just going to magically go away, regardless if Trump gets reelected or not, regardless if he gets impeached or not. The frustrations there don't just magically dissipate. And this is not just for the US, this is worldwide. We're seeing worldwide dissatisfaction with the status quo. with the sense of inequality at place. People are just not happy with their governments in general. So where do we go from here? How do things change? How does technology, economies, governments change as a result? Or will they stay obstinate? Like there's a lot of diverging paths in front of us right now, and like I said, it's very important for us to watch this next year, but not to somehow believe that this is the end all be all. It's simply the start of some very interesting years ahead. So,
I think Idiocracy is probably the most accurate depiction of the future that I've seen.
oh, it's not fictional; it's a documentary.
Yeah, with Terry Crews as the president.
Well, that I could go for that. Yeah, yeah, it has what the plants need or plants crave.
That's right.
Yeah. Another thing to watch, and this is probably the most boring, is regulations. So yeah, this has been talked about to death, but we will probably see more iteration, conversation around regulation, and that's good to see. So this will go hand in hand with a lot of what's going on with elections. This will go, hand in hand with the creation of sovereign currencies or digital currencies. Just very interesting, but too much to be said in one slide. But yeah, 2020 is definitely a year to watch in terms of regulation. Another thing is DeFi is really come into its own. And DeFi is one of those things that it's easy to pass off. It's easy to look at it and say, this is dangerous. You know, why are you giving loans to people who like you should not be? But at the same time, there's many problems that DeFi is addressing that the legacy financial system and even a lot of cryptocurrency before wasn't able to address and solve, or even if it tried to address, it was limited in its capacity. I mean, no one would ever believe that a single token project would solve the ability to have banking services delivered to people in historically underdeveloped sectors of the world, but through a sort of myriad of solutions, a sort of patchwork of solutions coming together to form the overall DeFi ecosystem, that presents a much more compelling alternative, a much more compelling suite of services and functionality that I still believe that people are underestimating the potential of this. And in 5 or 10 years, DeFi will really come to be one of the most important developments in the cryptocurrency space. Hard to see right now where it goes, how it will change, all of this sort of stuff. But I think this is one of the most important contributions that cryptocurrency has made to the larger world. And while it's still very much in its infancy, it's sort of a baby Yoda, if you will. But I think it has a lot of potential. It just needs to execute on that and continue to prove that it has relevance in today's larger fintech space. So very interesting stuff, very exciting. And lastly, I want to talk about, and Doc kind of covered this a little bit, the sort of derivative explosion that's going on right now. So we're seeing futures, we're seeing options, we're seeing institutional platform, ability for institutions to get on board. And again, I'm not a believer that institutions are the end all be all for this space, but giving them a seat at the table, giving them an open door, does bring bigger and better things. And so, as we can see with this graphic, I know you can't see the finer details of it, but the general uh, gist of it is that futures trading is on the up and up. It's we're seeing not only more of it, but a diversified selection to do so.
Could you read off what the key to that is? Like, what is the blue there?
So the blue is Binance. So red is
Okay.
OKX, orange is FTX, gray is JEX, yellow is Deribit, blue is Binance, green is Bitflyer, and the black, I guess, is BitMEX. So you can kind of see it's we're seeing sort of the end of the duopoly of Bitflyer and BitMEX, and the emergence of a diversified market that by definition helps to prevent these sort of whale moves, these sort of just like crazy volatile markets where everything is pinned to one exchange or one coin or anything like that. There's still going to be definitely lots of that, but not as much as we've seen in the past, and that's one of the prerequisites for seeing this space sort of grow up. We need to see more and more diversity in terms of exchange infrastructure, and we need to see less and less of this sort of corruption or wash trading or anything of that sort. So very important to see this sort of development. It's very exciting to see it sort of come to fruition, especially what I feel is the right place at the right time. Seeing more and more of these tools, these tools that legacy traders, the legacy financial institutions are used to, now executed in an emerging market. That's really exciting stuff. That's what we've been hoping for and what we've been building to the last 3 years. So year four, 2020 is going to be exciting for a lot of reasons. And those are the major ones. So hopefully that was a bit insightful. Hopefully you agree or disagree. As far as some of the coins I'm watching in 2020, like I said, Bitcoin and Ethereum are going to dominate. No doubt about that. Just from the development side of things, but also just from the market perspective side of things, they're just poised to do well. So I would be remiss if I did not, mention that. I know that's like the most obvious thing I could say, but there are very good reasons for doing so. Beyond that, I would say things like Quant Network is starting to prove itself with the partnerships that it's bringing on board. Um, there's let's see, some other good ones. Sort of not thinking of right now, but those that are in the DeFi space, I think are well positioned. Those that are mining profitable right now. So my two ones that I watch are Coin Wars with a Z at the end.com and whattomine.com. On those, Ethereum is kind of ubiquitous in terms of its mining profitability. But other things like Zcash, Ethereum Classic are doing well. Grin is also doing well. So those are ones to watch, even if I don't believe that Grin or Zcash are really anything more than novelty at this point. Um, Beyond that, security tokens are still very relevant, and they're going to take time to matriculate. But platforms like Ravencoin are continuing to prove that while they have some issues, that they're at the forefront of that initiative. That makes them relevant in today's larger crypto market. So hopefully that was kind of fun. Hopefully you guys got something out of that, and we'll take some questions before we shove off here. But yeah, welcome to 2020. Hopefully it's going to be a year of some green. Hopefully,
I've got
but
a I've got a question for y'all out there. Since we're in the second day of the year, this is typically when people make resolutions and set up goals and things like that. Anybody out there done that? Set up resolutions and goals and written things down like that? I want to throw a little bomb at you guys here, and this is by one of my gurus that I follow by the name of James Clear. And in fact, I put a whole module into the latest Trader's Edge class on what this guy teaches because I think it's so impactful and powerful. I'm going to read across the screen here a quote here. You do not rise to the level of your goals or resolutions or whatever you want, right? You do not rise to the level of your goals. You fall to the level of your systems. So this is consistent with what Scott Adams talked about, which is that goals are for losers, systems are for winners. So this whole notion of forget about goals and resolutions, build it in through systems and habits. Let me continue with a quote here. Your goal is your desired outcome. Your system is the collection of daily habits that will get you there. This year, spend less time focusing on outcomes and more time focusing on the habits that precede the results. So think about that for a second. If you didn't catch that the first time through, hit the rewind, listen to that quote again, or subscribe to this guy's newsletter and get these things because every Thursday he comes out with these little bombs of knowledge. And that's what I found is like a huge difference for those of you trying to break through and get successful in any field, regardless of what it is. forget about your goals because your goals require, passion and trying to get past the dip, and instead focus on systems and habits.
Yeah, Gregor's definitely it's on the game.
You got it
uh,
there, Gregor. That's the book, Atomic Habits by James Clear.
um, Rob was asking about Blockstack, especially after their approval with the SEC. Great question. So I wrote a newsletter back in July when that approval went through, saying that it was one of the most important things that has happened for this space, and specifically the security token initiative. They're pretty much throughout the entirety of, you know, in the recent years. So it was important because what they approved was a regulation A plus. What a Reg A plus does is enable non-accredited U.S. investors to invest in a crypto project, startup, security token project, whatever. Um, it was put in place after the 2015 Jobs Act. That's Jumpstart Our Business Act. Uh, Fantastic piece of legislation that opened the door, introduced the Reg A plus and the Reg CF, Reg crowdfunding. Reg CF has been more prevalent. It's out there on crowdfunding platforms. Unfortunately, you can only raise about $1 million with that. Reg A plus kind of allows you, kicks up the notch a little bit, allows you to raise a lot more than that. There's more sort of limitations in place, but regardless, for the SEC to approve the first two crypto related Reg A pluses this year, that was a momentous occasion. My opinions on the actual terms of the PPM of especially the block stack one, it's garbage. There's no way to put it any other way. Unfortunately, it was an ICO in sheep's clothing, as far as I'm concerned. Um, Now, that's not to say that Reg A pluses are bad. That's not to say that security tokens are bad. Unfortunately, Blockstack just got kind of lucky and was able to put through a turd and was able to put it out to the larger public. I don't know how. I haven't checked back to see how their funding went, but I think I remember that it was they raised a fair amount from that, just being first.
Every
It's
time you say that, I keep thinking of like some band in Jamaica,
What's that?
Reggae Plus.
Oh,
Yeah, man, we're Reggae Plus.
yeah. What does it say? Say beer can in a British accent, bacon in a Jamaican accent, or whatever. Beer can. Yeah, cool. What else we got? Stacks up.
Let's see.
Nice.
Vernie is talking about straddles. Would this be in the futures or options market? So there's two ways to do this. Um, I'm gonna do a little screen drawing here for y'all. Okay, let's go over to this. So, by the way, this is volume profile showing that we do have a minor node over here on BTC. So in other words, if this thing, there's no such thing as a quadruple bottom, guys. So if this falls through, we're heading down to the next stop down here. Just view these as sort of like floors in a building. That's the way you need to think of this, because if there's no volume somewhere, guess what, guys? There's no support. So minor support 5,200, major support 3,600 to 4,000. Don't personalize it. Don't focus. We focus on what you fear, right? So don't, if you're scared of this going down, then find a way to hedge if the price goes down to here. Make money with alpha. So back to the question about straddles, and the other thing that you can do is you can do like pairs trades. So you can go long one and you can go short another. So you can go long on something that's strong. I'll just put STR for something that's strong. And you can go short on something that's weak. This is what you do with futures. So that's called a pairs trade. Actually, if you think about it, every trading pair that we use is actually a pairs trade. So in other words, BTC USD is long Bitcoin, short the US dollar. That's the way it works. But you can do these pairs trades. That's one way to do it with futures. The way to do Straddles with options is, let's see if I can pull this guy up here. No, I can't. Hold on a second here. Straddles is with options, and I'm trying desperately to pull this thing up here. Hey, hold on a second. We'll get it. We'll get it figured out. Okay, there we go. A straddle with options is what you're going to do is right now the price is about 7,000, and it is comprised of buying an out of the money call, or I'm sorry, an at the money call and an at the money put. So right now, a straddle for the next 8 days is going to run you somewhere in the order of pretty close to $400 for controlling one full contract of Bitcoin. So typically, I'll look for something like maybe about a 30% return on a straddle. So this is actually, we talked about this in my newsletter the other day about putting a straddle on. I didn't really like it because the implied volatility is spiking a little bit prior to the beginning of the year. So we didn't have great conditions to set one up. But if we bounce from here, then we would be in a position to set one up again. Okay, so I am going to run back to, there we go, we're back. So that's a straddle and a pairs trade.
Cool. So, yeah, I think that also highlights that we're going to make trading a little bit more of a focus in 2020. So if you guys didn't catch it already, Doc just put out a new class. Doc, do you want to talk a little bit about that?
Yeah, it's called the Trader's Edge, and it's something I've been wanting to do for a long time because what I found is that the progression that everybody goes through when they get into some form of trading, right? You started investing and then you realize that, wow, if I don't have the patience or the time frame, I want to get into trading so I can compress the time that I spend in a position to just, the areas that I see edge in. So we all focus on this mechanically, and plus the fact that there's a lot of techie people that get involved with this sort of stuff, me being one of them, right? But then the next progression you get into is you find yourself just hitting this sort of glass ceiling again and again, and you figure out finally that it's you that is the limitation. And so this is sort of the final thing here is that we always trade versus our own beliefs. And you can even see them in the chat window here, what people believe and people want to see. You end up seeing what you believe in, which is called confirmation bias. So these are all things that make trading and making money in the markets extremely difficult until you're able to get past that. Really, your biggest limitation, your biggest opponent is not the market, it's you. And so this is a class to teach people how to get past themselves and to how to understand how to think through markets and really create the edge that's within all of us. Remember, trading itself is a fairly simple thing, buy low, sell high, buy things that are moving higher in price. We tend to complicate it though. We make it so difficult on ourselves because of this, this twisted massive nerve roots that we call the brain up there. So that's our new class that's out there, the Trader's Edge.
Cool. Yeah, and then by the end of this month, hopefully we'll have some new material for you guys. We're working to develop a Elliott Wave course as well, and also working on how to sort of branch and bridge to trading some of the larger equity markets. So lots of really exciting stuff. We're all about just trying to provide the highest quality education in the space. Our channel has always been about impartial news and education. We're not here to push any sort of coin or exchange. We've simply never taken a dollar to do so. This channel has continued to be unsponsored, and we're proud of that. So we're about pushing the space forward through education. And that's what Ready Set Crypto stands for in 2017, 2018, 2019, and now in 2020. So keeping it strong, keeping it going.
Keeping it real.
Yeah.
That's the only thing we can do. There's so much crap that's in this space that it just drives us crazy because we see the potential for what can be done in this space and we want that all to happen. And there's so much friction that's out there. So it's our job to get rid of the friction, cut through the clutter, and try to tell you guys how to really do it instead of you've trying to figure it out on your own.
Awesome. Well, cool. All right. I think we're
I
just
think
about
we're
wrapping
good.
up.
I think we're
Yeah.
good. So thanks everybody for our first show of the year and getting us
First
kicked off in
completed
the right
show.
way. Yeah, first
Yeah.
completed show. Yeah. Don't
Oh
forget.
my.
Yeah, yeah. Go towards goals. Go towards goals, but eventually work yourself into systems and habits. That is where you're going to see the biggest difference in 2020 if you do that. If you guys want any more information on that, reach out to me off the side. I'd be happy to point you at some good sources. All right,
Yeah.
thanks everybody. We'll hope to see you next week. Same bat time, same bat channel. See you, everybody.
Cheers, guys.
Bye now.